Hello guys, today I'm back testing GBP USD again. Now we are back testing 12th of July, Wednesday 2023. What happened on that day? Let's see. It was a CPI day. I've checked the news. Let's see. On Wednesday there was CPI news and also tentative annual budget release. So huge GBP news on that day. So here we can see our weekly bias is bullish because of the trend. It's clearly headed towards the upside, and we are targeting this draw of liquidity, which I'll show you in a moment. Whereas in the daily time frame, we can clearly see Monday was huge bullish. From Thursday the market was bullish. Thursday, Friday, Monday literally came down, did the daily reprice thing, rebalance the price here, went up. And also now what the price can do is come back, rebalance the price here again from this previous low, fill up this gap, and then continue to the upside. That's our anticipation, and my higher time frame bias is bullish on Wednesday. But it's CPI day, so we have to be a lot careful. It was US CPI. Now let me show you my analysis. The daily time frame, this is the break of structure, as you can clearly see, and this is the draw of liquidity. The draw of liquidity is an area in the market where the price is drawn. Why? Because there is huge liquidity there, and when we are bullish, we target the buy side liquidity, buy side draw of liquidity, and when we are bearish, we are targeting the bear side, meaning sell side draw of liquidity. That's all. And according to that analysis there, my higher time frame bias was bullish. So an important thing is done there. If I open my H4 analysis, you can see here there's a fair value gap here, fair value gap just below. So, and also we know that when the price is bullish, it makes higher highs and higher lows. It was making higher highs, higher lows, higher highs, higher lows, higher highs. So after higher highs, we can anticipate a higher low. And also if the higher low happened to the T, it will also be the daily reprice, and we can take a beautiful trade from there to the upside, right? Everything's looking good until now, but look, you marking the zone is not the thing. The market coming and respecting that zone, that's important. So if that's not happening, then you marking the zone is irrelevant, to be honest. Okay, so it doesn't want to show us. So this is Tuesday. Literally the market went up loads. It was a huge bullish day, so it doesn't make sense to directly change the trend on one day, right? So what we will do is we will still look for buys, but we will be a lot careful because it's news day. It is CPI day, and mostly we don't want to trade CPI. And if I play the price, look, this is very important here. Here, when the market didn't open, my analysis was saying either a buy from here after sweeping this Asian low, which is not swept yet, as you can clearly see, either a buy from here, a buy from here. But the price decided something else. Whatever the price decides, wherever the price decides to make a move from, we have to adapt to that, because we either react or adapt or we die in the markets, right? That's why, as you can see, the Asian session was clearly trending to the upside. It was a 37 pips Asian session, which is not a small session. If it's above 45 pips, we don't trade that day because the Asian session is very big. Whereas now the Asian session has closed, as you can clearly see. Here our analysis starts. Now if I open the M15 analysis, this is the Asian high, this is the Asian low. These are all showing liquidity swept because I have already done this. I am making this video after the analysis, and now we are looking for buys from this zone. Why? Because there is a demand zone here on the hourly, but I marked these two demands. In the hourly I marked this demand, and in the 15 I marked this demand, and there's also liquidity here. So I was looking for buys either from here or here. Here you can see the price literally went down here. This is our timing, 8 AM UK time. If you can if I zoom out here, you can clearly see it is 8 AM UK time right there. There was inducement. We didn't took the trade on 130. It came down, induced this position, came down to this demand zone and tap into the demand, and it was showing buying pressure from here. After seeing that buying pressure, I took a trade here while backtesting, and this was a losing trade. As you can see, our stop loss got hit, and yeah, it is what it is. We can't win them all. There will be winnings and there will be losings. We have to be able to accept it. But one thing that you can improve next time is looking at the hourly time frame. Hourly time frame, you can see there's huge selling pressure. I took the trade based on this hourly wick rejection here. There is a clean hourly wick rejection from this demand zone, just about tapping the demand zone. But I've learned one thing from this trade was the more the demand zone get mitigated, the better zone it is. And if it's just a touch like this, then it might be not one of the strongest, and it might come back and mitigate the demand zone again, which we have to keep in mind next time. Whereas here we can see we lost this trade, and after we have lost this trade, the price decided to go down a bit, sweep this external liquidity, and then CPI. This is CPI right here, 18 PM. This is 6 PM Indian time. This is GBP CPI news right here, and you can see what happened after CPI. We don't trade news, obviously, and if we are executing a trade, we at least need 2 hours before the news, and this news was literally exactly what we wanted to see happen, but in news. So this was technically a losing trade, and losing trades are part of the game. We have to accept it as a reality and keep on moving forward.